Hello and welcome into the KE Report. I'm your host, Shad Markwitz, and today we're getting an update on Magna Mining. Magna Mining is traded on the TSX.V under the ticker NICU and on the OTCQX under the ticker MGMNF. And I'm joined today with the CEO and Director of Magna Mining, Jason Jessup. And Jason, it's great to get you back on the show, as always. We talked about a month ago, but the company's had a lot of news out in July, and so I thought it'd be great to get you on and just update everybody on how things are going. First and foremost here is the news you put out on July the 16th, which really goes over your second half of 2025 guidance for the company. And as we talked about in our last discussion, the company is producing, via the copper and then, a limited amount of nickel and PGMs, but the focus right now for the company has been on development. And you break down in here kind of a month by month how much development feet per day that you've achieved underground. Maybe unpack this a little bit for people that are looking at you ramping up production, but maybe don't understand what has to fall in place first before you can really hit the gas pedal with production.
Yeah, absolutely, Shad. And yeah, thanks a lot for having me on here again. So we did put out our second half of 2025 guidance, and really it was to ensure that people's expectations are what they should be. And this is directly in line with what I've been saying for the last 4 months on our plan for McCreedy West Mine. So McCreedy West, for those who aren't familiar, was a non-core asset owned by KGHM, and we acquired it from them at the end of February. But because it was a non-core asset, it was undercapitalized. A limited amount of money spent on new equipment and underground development. And really, in any underground mine, it is critical to have your development out in front of you so that you can access new mining areas, develop new stoping areas, and continue producing. So we recognized that it was undercapitalized. It was one of the reasons why we wanted to make sure we had a strong treasury when we closed this deal. And we knew we needed to invest capital into the mine to set it up in a manner that would be beneficial for long term. And we really do believe that the McCreedy West mine will have a long mining future in front of it. The life of mine hasn't been determined yet, but with 9.3 million tons in NI 43-101 resource, we truly believe that a lot of that can get converted, and we can continue mining many years into the future. But that's the goal, and putting out this guidance, I think, is it's important to let people know, and I am quite excited about it. Now, to understand, what it means is that I think investors can look at us as a development stage company that is ramping up to commercial production. Now, even though we are in production right now, our focus has been on getting the development in place and investing the necessary capital this year so that in 2026 we're well set up and we can have a very strong production year. With that, we brought in a mining contractor they mobilized in June and started taking rounds in this month. And we plan on keeping this mining contractor until the end of the year. And that will, alongside our existing in-house development team, essentially double our production or our development footage over that period of time. What this will do is it'll get us about 6 months ahead on our development. So when we have time to drill off more stoping areas with the diamond drill, have those platforms available, get more of our development into ore, which will give us more flexibility in our operating plan and give us more time to plan stopes. Ultimately, that should increase our production. And then in 2026, there'll be no requirement for these mining contractors, which will have a significant reduction in our all-in sustaining costs and those sustaining capital costs that contribute to that. So that's basically the plan. And now, one thing I would hope everyone who read our press release would notice is that we expect grades to be increasing Q3 over Q4. And to me, that is very exciting, and it's very indicative of what we've been saying about McCreedy West all the time. We've put out some great drill results from the drilling that's been done since we acquired the property. And we're going to be getting our development out to where the point where in Q4 we'll start mining some of these areas. And that's pretty exciting. And I think that's something that, again, we'll continue to do in 2026.
Well, Jason, let's tie some of those comments together into the anticipated all-in sustaining costs. Because, like you say, you have this contract miner in there right now, but that's just in the interim until you kind of get a jump on things and get that 6 month inventory built up and get more stopes opened up. But your costs are slated to come down from Q3 into Q4. Right now, what you put out as guidance is kind of a range. And you said in Q3 a range of $4.95 to 5.49 per pound, but then that coming down to 385 to 447 in Q4. A lot of people were concerned about the higher cost in Q3 and probably in Q2, but this kind of ties into the theme that you're really not full bore production at this point. You're still in the development phase. So break down how all of those activities filter down into the costs.
Yeah, absolutely. So that all-in sustaining cost incorporates basically all the costs in the company, including, operating development, sustaining capital development, includes our corporate G&A, plus all our operating costs. So there's a lot in there. And really, aside from our exploration and some of the costs around care and maintenance on some of our other projects, it incorporates everything. Now, as we're developing and increasing development, which has been great, we've seen a great increase since March in the amount of development footage per day that the mine has been achieving. But if we were to go and, mine out every area we could as quickly as we could this year, we wouldn't get our development ahead. So we're purposely focusing on mining good quality tons, so excellent grade control, and the team has been doing a great job on that, but focusing on moving waste first and ore second. And that's our plan. And I've said this many times in different interviews. In my career, I've seen a number of operations that have decided to put ore first and waste second, development second, and ended up getting themselves into binds where all of a sudden you have nowhere to mine because you haven't put the development out in front of you. So we see that as being, it's critical to our success, is making sure we get our development done. And if that means that we defer some ore production, then so be it. We want to set ourselves up right because that's the opportunity we see in front of us, and that's what we're going to do. And again, with that, we would expect, and again, forward looking, but we would expect that our all-in sustaining costs would drop fairly dramatically in 2026 due to not requiring contractors and having some of these capital costs we're incurring not being necessary in 2026.
Well, and you also mentioned that you expect to get into some of those higher grade areas. Now, one area that you flagged, and we've talked about this in the past, but it's worth reiterating, is the western side of the 700 copper zone. So it looks like that's where the planned development is going into. Maybe speak a little bit about the exploration success the team has had there and why you're excited to develop into that western side of the 700 copper zone.
Yeah, so the 700 complex was partially mined by Inco prior to the mine shutting down in the late 1990s, and it was not a focus for even FNX mining. We did some mining more on the up dip portion of it, sort of close to existing workings, but this western side really was very underexplored. We knew there was good grade copper out there based on some of the Inco drilling, but not a great platform to drill from. So what we're doing right now is we are driving a ramp out to that western side, and we hope to have it in place so that we can set up a diamond drill in the next 2 months there to better definition drill that western side. But there's a gap of about 250 to 300 meters between the McCreedy West Mine on the west side of the 700 complex and Glencore's historic Hardy Mine, which operated for about 20 years from about 1950 to 1970. And, they were mining very similar ore to McCreedy West. They came up to the boundary between, at that time, Inco and Falconbridge and stopped mining. And Inco was very focused on nickel. And the areas we're excited about are very high grade in copper. So, it's an opportunity for us, but this area has, we've had some drill holes drilled out there. We've had a lot of the mapping that shows, massive chalcopyrite veins that, came to the end of the stope and were not chased because they were not looking for copper. They had better grade nickel to mine, and that was what their focus was. So it's an opportunity for a very large area. Inco mined in total between the main ore body and the 700 zone, about 15 million tons. Since FNX reopened the mine in 2003, there's been about another 7 or 8 million tons mined, and there really has not been, a lot of exploration. There might be 5 or 6 holes that really have tested this area in between, and what we have seen in some of those holes is some very high grade copper. So it's an exciting area. I think the potential to mine on that side of the deposit could be really the future of the McCreedy West Mine, and it's not captured in our resources right now, that potential.
Well, it's definitely something we'll be following along with keen interest here and wishing the team best of luck as they develop over into that. But yeah, if you raise the grade and you get into some of that untapped area, it just shows the ability to keep pushing out the mine life at McCreedy West. But Jason, you've got a lot more going on as a company than just McCreedy West. While that's the focus right now in the interim, you still have other mines waiting in the queue. Next up to bat is probably going to be the Levack Mine, and then after that you have Crane Hill, which we've talked about in the past. But you put out some news at Levack just on the exploration front on the 9th of July, and you were talking about two different areas, the Levack number 3 footwall area and also the Levack keel zone. So maybe talk about how things are going on the exploration front at Levack and what steps need to happen as you work on developing towards production there, I believe as soon as next year.
Yeah, the drill results we put out, I think, were indicative of what we believe the potential is at the Levack mine. So up in the keel zone, there was a number of intersections, albeit narrower than previous intersections, but again similar sort of copper tenors, about 25% copper within massive sulfide veins, and these are in and around the known keel zone with some modest extensions, but definitely gives us a lot more information that we can use to update our resource and wireframes and work that into a restart plan. One of the interesting things that we've recognized up there, now these are very early sort of days and there's not a lot of holes supporting this, but there does seem to be a secondary zone just in behind the keel zone, the high grade copper zone, which is more of a precious metal rich zone. So a little bit less copper, but higher precious metals, platinum, palladium predominantly, with some nice gold credits as well. And this is about anywhere from 10 to 50 meters further into the footwall from the keel zone. So we find that very interesting, completely open in all directions. So that's something we'll also be testing in the future to try and develop into another mining horizon that we could access potentially via a ramp. And that's what we're looking at doing right now. Is our restart plan is based around a new ramp from surface at Levack Mine that would access the keel zone, some of the remnants of the main ore body, as well as the number 1, number 2 nickel copper ore bodies. And there's a significant historic resource around the number 1 and number 2. It is mainly predominantly nickel, but high grade nickel, close to 2% nickel and 1% copper in historic resource. And we'll be coming out with an updated NI 43-101 resource on Levack Mine before the end of Q3. And currently, we're doing some drilling out in the number 1, number 2 ore body area to help support that resource. So very exciting area, very high grade, potentially early mining. So the keel zone's coming together very nicely. The restart plan is coming together very well. I'm really pleased with that. But I think the big hole that was exciting out of that news release was the one we drilled down dip of the number 3 ore body. And number 3 was a very rich, it, both nickel and copper deposit at Levack Mine that was mined by Inco. Also had a lot of precious metals, especially in the footwall side of it. But down dip of it, we are seeing very similar geological features and structures that are similar to the Morrison deposit, which was Levack Mine's super high grade copper zone that FNX discovered and mined from about 2009 until 2019. Currently, it's on care and maintenance. But we were mining 10% copper there with significant nickel and precious metals. What we're seeing below the number 3 is very encouraging. So the hole we announced intersected a couple zones, fairly narrow, couple feet, but with some broader mineralization around it over a few meters. But the one interesting area was where we intersected about 8% nickel, 2.5% copper, and about 17 grams of platinum, palladium, gold combined over a couple feet. And, being very rich in nickel, it's not typically what you would have expected in the footwall. But when I looked at that and our team looked at it, we quickly recognized a similarity to the upper part of the Morrison deposit, which was called the Rob Zone. And we mined that back in 2009, and it was a couple very narrow veins, 1 to 2 feet wide, very high nickel with some copper and precious metals. And that Rob zone, within about 200 meters down dip, transitioned into what we called the Levack footwall and later renamed the Morrison deposit. So the down dip is wide open in this area. We're currently drilling a wedge hole off of another hole, and so we will be, continuing to test this area and down dip. Again, early days, but very encouraging, very exciting, and there's definitely room there and potential to have another Morrison deposit just a couple thousand feet away from the existing deposit. So it's exciting, blue sky upside at Levack Mine, and again, this is a mine where we can go underground every day. People are using it as secondary egress for neighboring mines, and it potentially could be a very quick restart. So exciting.
Well, it's very exciting if the down dip extension of this, then some of that mineralization, you're seeing that higher grade, especially even in the nickel and the platinum and palladium and gold, could be something similar to Morrison and that Rob area that you were talking about. So if you got something similar to the Morrison deposit there going down below the number three ore body, that could bode very well for the restart plan, and we'll be looking out for that economic study as it comes out in Q3. Really briefly, Jason, maybe just outline for people the bigger vision for the company, which is you got McCreedy up and running, or you're working on that right now. But mine number two would be Levack, and then even Crane Hill sitting there in number three. Just give people a sense of the timeline of how quickly these other mines could come on. We're not talking decades here or even multiple years. We're talking in a year or two, some of these other mines could be contributing, and that'll bring down the consolidated all-in sustaining costs.
Yeah, absolutely. We've built a company right now and a team to support multi-mine operations, and that's always been our goal. So McCreedy West, we'll get it up and running the way we think it needs to be and optimized this year. In 2026, our goal is to have our restart plan completed and be able to restart the Levack mine. So that is the plan, and potentially that could be funded by cash flows from McCreedy West. So once we get that up and running and start it into construction, that's when we'll start looking at the next operation, which most likely will be the Crane Hill mine. And Crane Hill, again, is a shovel-ready project. We took a bulk sample there in 2024. Permits are in place, and it has a fairly low capex based on our 2024 PEA. So we've really built a team. Now, right now, McCreedy West is, taking the burden of the team we built because all of our, costs are be getting lumped into that all-in sustaining cost that McCreedy is, supporting. But, once we have a second mine and a third mine, we would expect those type of G&A and those shared services costs to be divided between three mines. So, potentially they could drop by two-thirds, which again is in line with what we would expect. And that is really what we're doing here. We're building a multi-mine company, and you need people for it, and there's some costs right now. But yeah, we're looking forward to getting that next mine up and running and sharing some of those costs. And I think with that, I just want to, add in today we made another announcement, Shad, that I think you've probably seen of our closing our NorthX acquisition, which is a large portfolio of exploration properties. And the more we look at these properties, the more excited we get. A lot of them are adjacent to our existing properties where we know the geology and the exploration potential and have theories for discovery already. And now having this larger land package, we can apply that knowledge onto these properties, which really have not seen exploration in a number of years. Probably, some of them in the last 10 or 12 years, they haven't seen any drilling. So a lot of really interesting properties that'll build into our pipeline of exploration over the coming years.
Yeah, Jason, I did see that. I was going to ask you for people just to jog their memory. Walbridge originally had a lot of these properties that are in this NorthX Nickel Corp, and they spun it out into a company called Archer that then changed their names to NorthX. But regardless, that's now been consolidated by Magna Mining. And so maybe just highlight one or two properties in there that you think are maybe more advanced, and then obviously the rest have an exploration focus, but maybe highlight one or two of the properties that you think is further along in the development process.
So there's a mix of different stages of property. So the most advanced project right now is the Broken Hammer project, and that was an open pit that was mined by Wallbridge and processed through a mill in Timmins. It was copper and PGM rich, and right now that is on care and maintenance. So there is a closure liability, and part of the deal was for NorthX to fund that liability. So we bought the whole portfolio for $1, and they ended up paying us 665,000 on closing. Not a terrible deal at all. But that property right there, we're doing an evaluation on it to see if there's potential for more mining and more exploration. So it is the most advanced. But then there was also another area called the Millnet Mine, and Millnet was a historic mine that operated for a few years. I would say over that package, and it's in the same structure that hosts the Podolsky mine and the historic Whistle pit, that Whistle offset dike. We believe there's still some very good exploration potential out there. But some of the areas that I think are even more interesting are ones like Blizzard, which is a JV with Glencore, and it's in the footwall of the Blizzard deposit, which is owned by Vale, and it is the updip of the former Thayer Lindsay mine that was operated by Falconbridge. And it's in a very prospective area of the South Range Breccia Belt that hosted some of the biggest deposits in Sudbury, such as the Frood Stobie deposit. So it's a very interesting property that's seen very little exploration, but does have some copper showings on surface. There's also the Creighton South property, which again is in that same South Range Breccia Belt, has a lot of similarities to some of the area where FNX had discovered the Victoria property, and it is again in the footwall of the Creighton mine, which is one of the biggest, longest life mines in Sudbury, still in production and mining down around 9,000 feet below surface. So absolutely a monster of a deposit. So some of these properties have seen very little exploration, but have the right kind of geology for footwall mineralization, and these are the ones we'll be looking at probably over the next 6 months and potentially putting into a exploration plan in 2026.
All right, so I think we'll wrap it up there for today, Jason. But there's a lot of things going on all fronts, on the operation and development front at McCreedy West, on the exploration front and eventual development at Levack Mine, where there's already a lot of infrastructure in place for a quick restart, possibly as soon as next year. Still advancing Crane Hill, but all of these new projects you just picked up in this NorthX Nickel Corp to add to all the projects you already had from KGHM and you already initially had, because we still haven't forgotten about Shakespeare either. So there is really a whole Sudbury camp that you guys have compiled here with really attractive copper, nickel, PGM properties. So we'll keep following along with all the news here at Magna Mining. And for those of you listening in, definitely click on the link below. It takes you over to the website for Magna Mining, directly to their news section where you can sign up for updates, follow along as it hits the newswire. Jason, keep us posted. We'll get you back on for an update soon. And as always, looking forward to our next conversation.
Thanks a lot, Chad.